Traders, Greg with market update. Okay, so we've started the week with some big moves in markets. The biggest moves in markets have come from Bitcoin and gold. Bitcoin and gold generally move in the same direction, but at the moment we're seeing them going complete opposite directions, with Bitcoin having an aggressive rally and gold selling off quite aggressively. Okay, so with Bitcoin, look, obviously Trump endorsed Bitcoin and he's pro-Bitcoin. So after he won the election, it gave the market a free pass to buy Bitcoin, and the market took that free pass. So obviously we smashed through that 80,000 target that we've been talking about, and market is obviously at the moment trying to target 100,000 now on Bitcoin. And we've got as high as 90,000 overnight. So from where Bitcoin was pre-election down just sub 70,000, we're up almost 30% on Bitcoin. I would suggest though that the easy part of the Bitcoin rally is over. So now Bitcoin to go from current levels around 90,000 to reach that 100,000 target, I would suggest is going to be the hard part of the rally. And why is that? The simple reason is that a lot of the Bitcoin whales are sitting on huge profits. And I would imagine that some of these Bitcoin whales will certainly be taking some profit, taking some of that off the table as we approach 100,000. I'm sure they won't want to let this opportunity go, in case 100,000 is a meaningful high, for Bitcoin. So, look, I would not be chasing Bitcoin fresh long at these levels, and maybe even a cheeky short up towards 100,000. But look, Bitcoin probably, most action we'll probably see. Support is down around 80,000, and I'd imagine we might see something like an $80,000 to $95,000 range in the short term for Bitcoin. For gold, the election was not kind for gold for the simple reason. There's a couple of reasons, but firstly, Trump, and we've talked about this, is that he's going to end the war in Ukraine. One of the reasons that gold did trade up to record highs was on the back of the safe haven flows of obviously what's happening in Russia and Ukraine, and obviously what's been happening also with the geopolitical tensions in the Middle East. So we've had a massive war premium built into gold. With Trump now coming in, market is taking off some of that war premium, and those safe haven flows aren't going into gold as we had been seeing in the months previous. So that's the first thing. The second thing is that gold had been ignoring what has been going on in the bond market and what's been going on in the currency market. We have had a massive surge in US bond yields. We've got US 10-year yields now up another 13 basis points overnight. They are trading above 4.4% closing. That is the highest those yields have been since July of this year. And that has also caused a massive spike up in the US dollar, and that's also at the highest levels it's been since July this year. Gold is just a shiny yellow metal that yields nothing, gives no dividends. It hates bond yields going higher. So finally, gold is paying attention to fundamentals and is trading down on these sharply rising bond yields. And also gold trades inverse to the US dollar. Stronger dollar weighs on gold. Gold technically also looks like it's breaking down. The uptrend support for 2024 market has now broken below that, closed below that. So look, buying dips on gold is probably not the best play. Selling rallies is working very well. Potentially further out, gold could once as low as 2,500 as the next big downside target. Okay, so today we do have some very important economic data out in the US, top tier data, and that is the November CPI data. So market is looking for headline number of basically market from going up from 2.4% from the previous month and actually rising 20 basis points to 2.6%. So CPI going up on the headline. For core year on year, market is looking for that to be stable at 3.3%. Month on month, looking at around 0.3% of an increase. Okay, why is this a big number? For the simple reason is that what we've been talking about and probably one of the most important things that's happening in the market is this surge in bond yields. If we do see a inflation number that does come out above expectations, those bond yields are going to go higher again. And obviously, it's going to take the US dollar higher with it. We do have a Fed meeting again in December. They just cut rates again for the second time this year in November. But now the market is starting to question whether or not the Fed may have to start pausing. Last night, we get Fed governors speaking all the time. We had Fed Governor Kashkari speak last night, and he said that if we do see an uptick in inflation before they meet in December, he would be happy to pause. The Fed pausing is going to be a big deal. When the Fed first pivoted the market and prepared the market for its rate cutting cycle, the market priced in for 100 basis points of cuts this year. We've already got 75, but also another 100 basis points of cuts next year to take the Fed's funds rate down to 3.25% when they finish. And now, if we're looking at a Fed pause and we're taking away Fed rate cuts next year, the support that these rate cuts previously market had been built in is going to be taken away, and we're going to be left with a more restrictive Fed policy. At the moment, equity markets are still trading Trump euphoria. Equity markets generally do not like rising yields, do not like a rise in US dollar. At some stage, the equity market will not be able to ignore this, and I would suggest if we do get a CPI print that comes out above expectations and we see these bond yields spike up again, we'll probably see finally the equity market react to what is happening in the bond market, and see equity markets actually now trade off these record highs. So I think that's the risk tonight. That's what you need to be watching out for, and certainly wouldn't be going along equities into this number tonight. Good luck with your trading, and we will catch in with you shortly.